Hello, ladies and gentlemen of Germany. It's me, NYSEinstein, from the floor of the New York Stock Exchange. I'm still pretty sick. I've got pneumonia. But anyway, I came to work today because I'm a workaholic and I can't stand being away from the market. It seems like we've got some really complicated things going on, and I'm going to talk about them. So today was sort of basically a flat market. Market traded a tight range all day long. Okay, tomorrow we have the FOMC meeting, okay, which we had a rise in interest rates in late December. There was a projection that basically data-driven information would project whether there'd be a change in interest rates, a further rise in March or then in June. And apparently, because the way the market responded to the December change, and since January 1, the huge sell-off, irrespective of the massive rebound from February 11th lows to the March 11th highs, data-driven projections show that they're going to postpone the March rise and perhaps do it in June, perhaps maybe not even until December. So I've been kind of curious. To me, economy seems well, unemployment seems good, earnings seem okay, but apparently some retail numbers came out that were horrendous. They revised GDP numbers, and basically the health of the economy in the U.S., from what I've heard, and I'm not an economist, and I always tell you that, is that we're not actually in that great shape. We are in better shape than all of you, and better shape than what's going on around the world. But net, we're not that great shape. So whether they feel that this market and the economy could not really sustain a further rise in March seems to be what's on the table. We've got the decoupling or recoupling trade with oil. Oil did bottom out at the 25, 26 level. It has rebounded up to the $40 level, but it's also topped out at that level. It seems like it's selling off. Is the sell-off that for the last 6 months been affecting the market? Market down 100, oil down, market down, oil up, market up. Are we in that mode right now? No, we've decoupled that trade. Okay, there is weakness in oil sector. There is some weakness in the energy names. They sort of topped out at that $40 level, and they've been coming in a little bit. Has it affected the market in a big way? No. Is there other looming stuff going on? It seems that way. FOMC, clearly. Our economy and retail numbers, clearly. What happened yesterday? Iran said, which I've talked about for a little while. First, we've got this Saudi-Iran meeting going on about the oil sector coming up on the 22nd. Okay, so oil production numbers, oil well numbers, and all that are a big factor what's going on here. So Iran, who sanctions have just been relaxed on, and who did jump in with Saudi Arabia and say they would do sort of a production freeze, okay, suddenly thought it over and go, what is this, crazy? We haven't been able to sell our oil for the last years and years under restrictions, trade restrictions. And now that we've suddenly made this deal with Obama, and it's time for us to sell oil at this level, which is not the 25, but bouncing back to 40, and we can put a little money in our till, we're not going to participate in that. Forget about it, okay? All that being said, forget about it. We are not freezing our production. We are not freezing distribution. And that's what sort of capped the oil at the $40 level. So that sort of is hanging over everybody's head. Okay? So there's a lot going on. Okay? We have the end of the quarter going on this month. We've got big rebalances by the end of the week. We've got a gold index rethink. So there's a lot going on. This is just a contango, fofango, momango, banana fofana, all wild and crazy. A lot happening here. I'm kind of just going to take it one day at a time. Tomorrow's Wednesday. We'll see what happens at the FOMC, and we'll give you another rebound on what's going on. Hang in with NYSE Einstein. Love you, buddy.